On behalf of Team Azure, I welcome you all for our annual event Evoke 2016. First of all, let me thank you, all of you, for taking your time out on a Saturday evening. And let me assure you, like last 2 years, this year as well will not disappoint you. We have two great speakers today. Last 1 year has not been great for the markets. People who were very bullish have started doubting on the functioning of this government in the midst of tolerance, intolerance, azadi, barbadi, etc. That's where the advisor's role actually becomes very, very crucial. As Sant Kabir says, साधु ऐसा चाहिए जाका पूरा मंग विपत्ति पड़े छाड़े नहीं चढ़े चौगुना रंग. What does this mean? It means that advisor, sadhu means advisor, an investor expects that in the bad times the advisor need to be more visible in front of him or her rather than only coming during the good times when you have the emotions are also on your side, you yourself are feeling bullish. But in the bad times, when the going is not good, advisors need to be more visible in front of you to do the hand holding. And at Team Azure, this is our endeavor that we need to be more visible in front of the clients, especially when the going is looking tough. However, you may think that picture is not that rosy. Our first speaker has a different take on that. Our first speaker, Mr. Navneet Munot, will share his thoughts on why we will make money in India and how we are progressing on that path. Mr. Munot is a CIO with SBI Mutual Fund since 2008 and he is responsible for overseeing investments across asset classes worth $10 billion. In a career spanning over 2 decades, Mr. Munot was associated with Morgan Stanley Investment Management and Birla Sun Life AMC. A chartered accountant from ICAI, a master's in accountancy and business statistics. Mr. Munot is also a chartered holder of the CFA Institute USA and FRM charter holder of GAB, Global Association of Risk Professionals. Ladies and gentlemen, please give a big round of applause to Mr. Navneet Munot.
I have lots of charts and lots of slides, but I'm not going to use any of them. Just try to keep it as interactive as possible. I'll speak for a few minutes and then probably we'll have some interaction. As you were saying that there were lots of expectations till a year or 2 years back, but on the ground you keep hearing this, "Achhe din kab aayenge," right? And you keep also hearing lots about that. He was talking about tolerance, intolerance, azadi, barbadi. My wife watched a movie a few months back, a movie called Piku. Piku. I don't watch movies of Piku, right? And then I write an annual article, a person of the year, from the story that she told me. I could write one paragraph that India is in a Piku movement. Less motion, more emotion. So Radhe Ma, Indrani Mukherjee, or Vijay Mallya, and I can just go on, Kanhaiya Kumar, and all these people have the amount of time that kind of get devoted on all these media channels and all, compared to most of the other serious things that are happening in the country, is much, much greater. On the day of the death of probably the greatest Indian of whatever I've seen since I was born, the day he died, Mr. APJ Abul Kalam, on that day, if you remember in some of the national dailies, Times of India, the amount of space, column space that got devoted on him versus the same day Yaqub Menon's hanging had like 8 pages and APJ Abul Kalam Azad had probably a small, some like few centimeters of the whole column space. That's where we are. And that's why I think several things from the, I'll talk more about what is relevant from the economy and markets perspective. Won't get into the whole the political debate thing, but I think because of that, I think everything that's lots of good that are happening from a global perspective and from India's perspective are completely getting neglected. And in these days when like we are so bombarded with so much of information overload, thanks to the internet and WhatsApp and social media and the kind of noise which is around, I think we get too much of these noise, and some of the bigger picture get lost. And in next few minutes, I'll try to give you that big picture, which is really getting lost, and when people are, I think, not able to grasp what's really happening on the ground. What are those some of the big changes that are happening in the economy, happening in India, which are not kind of talked about? Before I talk about the India, but as he was just mentioning that markets were down, I mean, till few days back on a 1 year basis, if you invested money, let's say in February or March last year, point to point, we would be down 10 or 15%. Of course, mutual funds would have been down a little less because probably we could avoid maybe some of those stocks which have fallen a lot more. But otherwise, overall markets have been down, and there are like 2 or 3 major concerns which have been there. I'll briefly talk about them, and then I'll talk about the big picture that I see in India for next 5, 10, 20 years. One of the big concerns recently has been about oil. Before that, I'll just make one statement about the world, and then maybe I'll use this just one picture of where the world is. So large part of the, I'll just use one sentence, a large part of the world is dealing with the structural challenges, but trying to sort it out through cyclical solutions. The structural challenges like in some countries there is aging populations, and let's say Japan, Russia, the population itself is declining. They don't have the demography that we have. In some parts of the world there is tremendous amount of debt overhang, so much of debt that either households or corporates or the government has, that till the time that those balance sheets get repaired, it will take a lot of time for them to get back to the growth track. There are so many other challenges. Probably I just have one picture in terms of where the world is. The difference between India and world is large part of the world is dealing with the structural issues and trying to solve it through cyclical solution. A cyclical solution is like central banks printing more money. In large part of the world, interest rates are negative. In Europe, 40% of the bonds till 5 years maturity are trading at negative yields. So just last few months back, Nestle could borrow a 2-year money at negative yields. People are happy giving 100 rupees to Nestle today and get 99 rupee 80 paise back after 2 years. Banks are giving, because if they keep the money with central bank is charging even more. So you have to keep, I mean, just to keep your money in safe custody, you are paying. That's where the world is, because growth opportunities are not there. Even when they are printing so much of money, businesses don't have the confidence to invest, or probably the other households are also not making the investments, despite the fact that the central banks are trying very hard. The difference with India is that the problems that we have are more cyclical in nature, can be sorted out, and I'll try to show you some of the bigger problems that we have, how they will get sorted out. But I think the structural story of India is very much intact. So the big difference is there are structural problems, trying some cyclical solution. In our case, problems are very cyclical, very short term, but a structural story is very, very clear. There are 2 big challenges because the markets were down in last 1 or 2 months for 2 reasons. One is that in last 25 years, the way China has grown, this is the biggest economic miracle in the history of mankind, what China has done in last 25 years, where from nowhere, they were actually poorer than us. 30 years back, they were much smaller than us, but did an amazing job in terms of creating the manufacturing capital of the world. They became almost from nowhere to 1/4 of global manufacturing, 1/4 of global trade. Everything that gets exported, imported, they are like the largest 1/4 of that. They reached a stage where they were guzzling almost 50% of world's copper, 50% of world's aluminium, thermal coal, iron ore. But you can't keep growing like that, right? I'll just give you one data point to give you a magnitude of what China has done. And they have been doing it for a long time. But when the slowdown happened in 2008, when the Lehman crisis happened in 2008, Post that, the world slowed down quite a bit, and it's very difficult for a country like China to keep on growing by exporting to the world. So of course the slowdown happened. And on a larger and larger base, when you are a $500 billion economy, you can grow at 10, 12%, 1, 2, 3, 5. They became almost a now $10 trillion economy. You can't keep growing like that. But because it's a communist country, it's not a democracy like us where you go through cycles, there would be some slowdown, you have to accept it, there will again be some correction, things will move up. To ensure that there is no social or big political backlash, they went on a big, what I call, let's say, a money printing or huge amount of stimulus from 2008 or 9 onwards. And I'll just give you 1 or 2 interesting data to show you the magnitude of what they have done in last 7 or 8 years when the world was slowing down. In last 7 years, China has consumed more cement than what United States has consumed in last 100 years. In last 7, 8 years, China has consumed more cement than what US has consumed in last 100 years. That's the magnitude of the investment and the stimulus that they did. So if you travel to the hinterland, I mean, you will see ghost town, you will see like buildings and buildings that have got created. And they were also dealing with, because the way they grew so fast and it was like a manufacturing-led growth, very resource intensive, also created lots of challenges. So one of the big challenges was that huge corruption. And for that, you just have to travel to Macau and see the way those guys gamble. Go to an HSBC branch in Hong Kong and see the way people get the bags of cash and all the KYC, and by the way, all those money laundering and all what these guys ask, I mean, none of those are applicable in Hong Kong. But the best, if you want to see, you go to Switzerland and see. So if you go to any shop of Omega or any high-end brand, and you see the way buy watches, it's like the way we buy vegetables. Sasta mil raha hai, thoda 1 kilo ye bhi le lo. And this is how, that's the magnitude of the corruption which they are cracking down. It's the pollution. I mean, I don't have to tell anybody who travels, I mean, can see the cities are becoming unlivable. And something called a shadow banking, where outside the banking system, the amount of money that has been lent in various ways. So last year, more than 1 crore people in China started trading in stock market, because stock market was like going up from November to June, and more than crore, I think 2 crore people borrowed money. And there are brokers who give you a note, where the note is basically, I mean, so you subscribe a note, the underlying of that note is Shanghai stock futures. So when you buy stock futures, you just have to give 10% margin, right? So if you are taking 100 rupees from someone, you are taking actually an exposure of 1000 rupees. You are only putting 100 rupees, but your exposure to equity is 1000 rupees. On that note, you can go to another lender and borrow money against that. And let's say, so he'll keep a 10 or 20% margin and will give you another 80 rupees. So your exposure has gone up how many times? And there's a kind of shadow banking that got created. Now they're cracking down on shadow banking, cracking down on corruption, cracking down on pollution, cracking down on property bubbles. So obviously the growth is going to slow down. You can't keep on growing the way you have been growing. But because of their massive growth in last few years, as I said that, and it was very resource intensive. So all the commodity prices kept going up from 2003, 2004 onwards. And as I said that they were really guzzling commodities. There's a recession in New Zealand. Why? Because China was the biggest importer of all the milk products. The country is hugely dependent on the dairy industry, and now there is slowdown in China. They are not importing as much. So the whole country is in recession. So large number of countries in the world which were dependent on exporting commodities to China, they are all in slowdown. But what happens that historically the mankind is, I mean, you have to give it to the ingenuity of the humanity that whenever there is like a huge demand, some supply solution will come. So because they were investing so much, because they required so much of steel, the steel capacity globally went up so much. So in China alone, their total steel capacity went up from 100 million tons to 1 billion tons, 10 times in like last few years. Same thing happened in oil. Because China was consuming so much of oil, oil prices kept going up. Because oil prices kept going up, the world started investing a lot more in alternative sources. So you got this massive shale gas revolution in US, and over a period of time it became like a cottage industry in US. It's not like you need an ExxonMobil to put up a large, the oil exploration or the refining shale gas was like at a much kind of a cottage industry level, and the way technology kept improving. So initially it was like more than $100, it became like 80, 70, 60, they became viable. So the US, which was the biggest importer of crude oil, turned to be like on almost an energy exporter. Came the LNG, the liquefied natural gas. So much of supply has come that the LNG supply was there. Huge investment in solar energy, huge investment in wind energy and all that. So on one side, a lot of supply of these commodities came, and China itself has slowed down. So what happened? All the commodity prices started falling, which was a great news for India. China's slowdown was a godsend opportunity for India. But there is another part of it. So when oil was at $115, it was very bad for us. That created lots of challenges for us. Oil kept falling and came to like $50, $60. Just coincided with the fact that Mr. Narendra Modi also became the Prime Minister, but it's just that Destiny's Child, and it was so lucky that the oil prices fall also sorted out most of our macro challenges. So India had high current account deficit, we were importing so much, exports were hit, but then the current account deficit fell because oil prices fell. We're importing oil worth $160 billion and now importing 90 or 80, so $60, $70 billion we could save. When oil prices fell from 115 to 60, 70, it sorted out most of our challenges. So we had this high current account deficit. Because of that, the currency was weakening. Remember in 2013, the rupee fell from 50 to 68. Rupee could stabilize because the current account fell, more flows came, the rupee stabilized, foreign exchange reserves went up, the government subsidy bill went down, so the fiscal deficit came down. Because the inflation came down, all the commodity prices have come off, so overall inflation has come off. That's why RBI could cut interest rates, because inflation is down now. So RBI cut interest rates. So I think most of our challenges, thanks to the fall in the commodity prices, got sorted out. But the second part of the movie, and this is like, you watch any movie and then you have those in between kahani mein twist. So we are very happy commodity prices are falling. We are a large commodity importer, such a good news for us. The second part is, in which people didn't realize, that oil from 115 to 50, 60 was like a good news for the world, not only for us, but globally for all the consumers. At $28, it created lots of challenges for the world. At $28, where is oil on earth, by the way? Look at the names: Iran, Iraq, Syria, Venezuela, Nigeria, Sudan, Libya, Syria, Saudi Arabia. The more I talk and the more I get shivers. So then it creates a lot of challenges at $28. I mean, none of these are like, very few of them, hardly any of them are democracies. So at $28, it creates a geopolitical risk, because some of these government may be toppled, and it can create a massive social unrest. You can have a situation where ISIS takes over Saudi Arabia or some other country. It creates a big challenge that these countries had so much of reserves building when oil prices were higher. Now since the prices are lower, to meet their expenditure, they have to sell whatever they have bought in last so many years. So a Saudi Arabia Monetary Authority or Abu Dhabi Investment Authority or KIA, Kuwait Investment Authority, are all selling now from their reserves. Selling in the sense that all the equities, global bonds, global emerging market equities, whatever they have, they are selling. It creates a challenge because large number of commodity companies, and I'll give you only one example of crude, but I think it's true for all the other commodities prices where they have fallen. There's a risk of commodity companies going bankrupt. Because commodity companies can go bankrupt, it creates a risk for all the lenders, the banks who have lent money, who have large exposure to these commodity companies. So in fact, YTD this year, till few days back, banks globally were down like 20-30%. In fact, some of you might have got that WhatsApp that Deutsche Bank's market cap is less than even Kotak Bank, which is 100 times bigger than the Kotak Bank and all that. I can just go on. It created a systemic crisis for the world. And that's why it was necessary for us. It's so funny, sitting in India, I'm praying for that it's good that our oil prices go up, and it kind of creates some stability in the world. And finally, now that oil prices have gone up to the 40, I think it has provided some stability to the world. But Picture abhi baki hai mere dost. So this is the third part of the movie. So I showed you the first part where because of the slowdown in China on one side and so much of supply across commodities that have come in last few years, because China was consuming so much, so producers found new ways to improve production or new production came up, prices fell. Now they created a big crisis at a lower level, but once they kind of stabilize at slightly higher level, but they are not going to go up. Oil is unlikely to go up to $115 because that will again lead to a bigger shale revolution. It's not only that shale is only in US, shale is there wherever you dig in earth, probably half of the places you will get shale gas or the LNG or something or the other. And the way solar energy is becoming so cheaper and cheaper and cheaper by the day. I mean, in some of the European countries, they have a big challenge because solar has become so cheap. The government was giving subsidies and now they have excess power. So I'm sure Saudi Arabia would be sensible and they would not allow the prices to go up beyond a point, because again that will just kill the demand for fossil fuel in the very long run. But the third part of this movie is that structurally the commodity price is stabilizing slightly higher than the current levels, but not going back to the previous peak. What it means is that a large money which was going to the few commodity producers will get distributed to the 7 billion consumers of the world, 6 billion consumers of the world. Now to make it very simplistic for let's say for India, what it means. Let's say a few years back when we were buying oil at $115, we were sending that money to Saudi Arabia. What Saudi Arabia was doing, a large part of that money was going into SAMA, Saudi Arabia Monetary Authority, which gets this money. They invest this money in, let's say, an Aberdeen Global Emerging Market Equity Fund. I'm trying to make it as simple as possible. The Aberdeen Emerging Market Equity Fund is investing in several countries, including in India. Money is coming to India, Indian markets going up, and we were happy. Was that good for us? Or what is good for us is that instead of sending that $115, we send, let's say, only $40 or $50. The remaining $60, some part of it is kept by the government, which has been the case mostly last 1 year. Large part of it has been kept by the government, which gets spent on building roads or building railways or spending on irrigation. And a good part comes in our wallet, where we can either buy another Titan watch, or we can buy another car, or we can probably have one more Goa trip, or if more money is left, then through these people you invest in my funds. So either you can save that money or you can spend that money. This is structurally good. So honestly, I think the whole China slowdown, shifting from that manufacturing-led, more resource-intensive to a more consumer-led, service-led growth is going to be good for the world. The world is also worried about China, that there could be a hard landing, there could be a big crash. If you just do a Google, China's economy is, or Chinese economy, you'll be amazed to see the kind of suggestions that come. You know that Google has this, I mean, you type anything and some suggestions will come, you'll be amazed. I mean, you'll see words like bubble, crash, collapse. This is what everybody in the world thinks, and they keep doing a Google. China's economy is a bubble, China is going to crash, China is going to collapse. That everybody thinks it's going to happen, but in last 25 years, every single year, one of the best seller in the world would have been something, somebody would have said that how China is going to collapse and how it is a bubble, but they have surprised the world for last 25 years, and I still think that maybe they can surprise for a very, very long period of time. It's one of the best leadership in the world. They've done an amazingly great job in last several years, and maybe they can survive and they can do good. But such a large economy, just think of it, 1.4 billion people, if they start consuming, if they have a more service sector, more stable growth, it's going to be very good for the world. And then they are really making that shift, a more manufacturing to a more consumer demand. In last 1 year, 7 of the top 10 movies in the world are Chinese movies in terms of gross box office collections. And these are Chinese movies only watched by the Chinese people. These are not like your Interstellar or whatever, I don't know which is the latest big hit. Oh, after that, James Bond movie has come. But I mean, some of these movies are like Chinese watched by Chinese. And I can give you, I mean, Baidu and Alibaba and Tencent and all are some of the largest e-commerce companies in the world. So they are making that shift, but it's quite good for us because it's not going to be resource intensive. Commodity prices remain low, and it's quite good for us. The risk for the world is that a lot of people think that because China will have this trouble, their exports are not growing as much, and they may have to devalue their currency. So what Chinese local people are doing for last couple of months, if I think that my property market is not going to deliver returns, my stock market is falling, their yields and deposits are like 3-4%, and if you do a Google, there are lots of global experts who are telling you that China will collapse, Chinese currency will fall 20%, 30%, 40%, then natural reaction is let me shift some of my money overseas. This is what the Chinese local people are doing. So far, because China has accumulated so much of reserves in last few years that they have been able to survive and manage that. Could be that in 1 month there are so much of outflows, they are not able to do that, and the currency depreciates 20%, creates a big currency war in the world, but I think there's a very, very less possibility. I think they are going to stabilize. So I think a stabilization in commodities, stabilization in China, money shifting from commodity producers to commodity consumers, the 6 billion people in the world, is going to be good for the global economy, and things are going to be better. Why I'm talking about all this is that our markets are way too dependent on the foreign money. And that's why, you keep hearing few months back, the risk for India was like what's happening in Greece. 2 years back, the euro crisis, whether the Greece will remain in the euro, sometime China, sometime whether the US Federal Reserve will increase interest rates, something or the other, because we are so connected with the rest of the world. I don't have that. You'll be surprised that this is India's Nifty or Sensex. This is, I think Sensex or Nifty. And the other line is the German DAX. Germany's equity market and Indian equity market for last 10 years. And we have moved exactly in tandem. Why is that? Because we are so dependent on the foreign money that when few $100 million come from foreigners, when there is globally positive environment, US Fed is printing more money, there is a quantitative easing, foreigners are investing, our market goes up. Something is happening in China or something is happening somewhere else, foreigners are withdrawing money, market goes down because the domestic investors don't have as much faith in the country, and we have been so dependent. But it's been kind of now that correlation is gradually breaking, and my call is that over the next several years will be far less dependent on the global money, because the domestic money flow will become larger and larger and larger. What gives me this faith that domestic investors will have huge faith, and India is, as China created, I told you, an economic miracle. I think India will create an economic miracle in next 20-30 years, which will be unparalleled in human history. Because China did it because they were not democracy, so it was completely centralized. It's one guy or whatever, few guys deciding at the top. Here the way it's happening in a very, very democratic manner is very different than what any other country has achieved. And why I say that India will create an economic miracle which is much bigger, but to see the kind of institutions that India has built, most of the countries, when they were growing, they didn't have the kind of institutions that we have. Just to give you one example, till if I remember this number correctly, till 1964 or so, in Switzerland, women were not allowed to vote because it was thought that, how can women vote? In US, after their the independence, for over 100 years, women didn't have the voting rights. So at a $500,000 per capita, one of the poorest of the poor country in the world, such diverse country, the kind of things that we have put in place, one vote, one person, regardless of, so there are lots of things. I think the poor people didn't have the voting right in several countries, the kind of central bank that we have created, the kind of election commission, the CAG, so many checks and balances, the free media, this right to information and all. No country in the world at such early stage of growth has been able to build. Reserve Bank of India is the most independent central bank in the world. I think even in US Fed, they have to keep in mind that there is an election year and what can happen to the economy in India. The central bank doesn't have to, and that's why you keep hearing the story about the conflict between RBI governor and the finance minister once in a while, because it's really, really very, very independent. The kind of institutions we have created, the kind of markets that we have created, 100% dematerialization, it took a very, very long time. The way you trade, T+1 settlement, I can just go on, whether in terms of market, whether in terms of other political institutions, the kind of institutions India has created. That's why I say that our growth, I think, is going to be really an economic miracle for the world, because most of the other economies haven't done that. In Europe, when they really built those Paris and those countries, they had the free resources. They could send everything from India and Africa. Half of the world was your colony, and then you got free labor to build that. India is doing in a very, very democratic manner. So it's going to be a very, very different kind of economic miracle. I'll just give you one, and there's this famous quote of Mark Twain: history doesn't repeat, but it rhymes. And I see some parallel between what's happening in India today and what happened in US in 80s and 90s. In 1970s, Shah of Iran left the country. It created a big problem in the whole of Middle East. Oil prices went up very sharply, and not only oil, it led to a generalized price rise in all commodities. US faced very, very high inflation. It's very difficult to believe today that US had inflation as high as 15-17% in late 70s. And the growth was falling, which is somewhat similar to what we had till 2-3 years back. 10% inflation, 5% economic growth. Our economic growth was declining, inflation was going up. That is called kind of stagflation. Stagflation is recession with inflation, but I'm saying kind of stagflation, which US had. What happened in US, in 1978, a guy named Paul Volcker became the chairman of the US Federal Reserve. And he has a famous statement. He said when he became the chairman of the US Federal Reserve, he said, I will break the back of inflationary expectations in US. I mean, I will kill growth, but I will ensure that people in US have faith that this central bank, this country will never ever going to see high inflation again. Can you relate this to September 13 when Raghuram Rajan became the governor of the central bank? India had almost 9-10% inflation, and more than the headline inflation, what is more important is the inflationary expectations. Even today, when you give your, let's say, a flat on rent or anything, let's say your maid servant, you assume that 10-15% hike तो होना ही चाहिए. का ड्राइवर भी बोलेगा 10-15% तो मतलब बढ़ ही जाता है, कितना किराया तो बढ़ जाना चाहिए, because you assume that inflation उतना होना ही चाहिए. And Rajan came and said 8% CPI by 2015, 6% 2016, and from 2017 onwards 4% CPI. And last year the government of India and Reserve Bank signed an agreement where if the inflation is not 4%, if it is, let's say, 2% higher or lower than the 4% target that the RBI has taken, if it is above 6 or below 2%, RBI will give a statement that why they have not been able to contain inflation at that level, why it is outside that target, which is probably one of the biggest reform that has happened in last 18 months in India. It's underappreciated. It's not known as much. It's not discussed as much widely because India has this history of doing a great boom. During the boom, asset prices go up, real estate goes up, overall inflation goes up. Because of that, RBI has to increase interest rates and we see a bust. We go through these cycles of boom and bust, and this guy is telling you that we will ensure that inflation remains at that, and government has committed, right? So if the government can't, let's say if you are moving into an election year, you substantially increase paddy prices, sugarcane prices, rice prices to keep people happy. You can't do that because RBI will increase interest rates substantially. If you are doing that to please someone, RBI will increase rates and it will become very difficult for the government to do that. So the inflation stabilizes. The second thing that happened in US, so that's 1978, Paul Volcker, Raghuram Rajan, 2013. The second thing that happened in US in 1980 was a guy named Ronald Reagan who became the president of US, and he has a very famous statement called, the government has no business to be in business. Can you relate this to, and it's not about one person, but I think it's all the other chief ministers as well, but can you relate this to Modi's one famous line? Something similar to the government has no business to be in business? Perfect, yeah. The maximum governance, minimum government. And these two things, Ronald Reagan and Paul Volcker, that monetary policy framework and that macro framework, gave US a 20-30 year long period, what is known as NICE, non-inflationary continued expansion. That you get growth in the economy, but inflation doesn't go up for a long time. What it does is that it gives the people a lot more faith for a business or as an investor to invest for a long time. I'm very happy putting money, and the third thing that happened in US that time was something called a 401k. where people who join any organization, so just like our provident fund in 401k money, some part of your salary, and then your employer is also putting that money, and then you invest for long term for 20, 30, 40 years. A 25-year-old guy start thinking about 65, and then he puts kind of our SIP, but we still think of 3-5, they started for 30, 40. So these three things together gave US that period of nice. It also developed a lot of other markets. So what happens that when rates were 15%, people got used to that returns. And then rates kept falling, and now of course it's like 1.7%. But then you got used to a certain returns. You have a lot more faith on the economy. You are willing to take more risk in your portfolio. And that's how the REITs market got developed, real estate investment trust, which I think is going to be very big in India as well. People started investing a lot more in alternative assets like private equity, venture capital, and all that, because to get higher returns, you have to take higher risk, and you have more faith on the overall macroeconomic stability, and that gave so much of risk capital came to the market. And I think that nice era India can have because of the macro framework that we are putting in place. The another thing I want to talk about, there is something called, there's this guy named Charlie Munger. He's the partner of Warren Buffett, the richest, if not maybe the second or third richest, if not the richest person on earth, the best investor known to the world. And he has a famous theory called a Lollapalooza effect. A Lollapalooza effect is when several things, so let's say everything is done to achieve a certain outcome, but all put together achieves an outcome which is very different but much bigger than what individually each one of them are designed to achieve. And I'll just tell you about some of the things that are happening in the economy, but for a certain reason, but together all of them what they can do. So I told you about this 4% framework. That's one of the most important things. Some of the other things. So when government says that this year, despite all the political pressures, despite losing election in whatever Bihar or maybe the upcoming election anywhere, the government said that we will adhere to the fiscal deficit target. We will not spend more money from the government to get growth. So I mean a very, very sound fiscal policy, a sound monetary policy. And just add a couple of other things, I can put some more, but I'll show you what are the impacts that put together they will all have. The gem trinity is the Jan Dhan Yojana, Aadhaar card, and the mobility. One of the biggest gift of UPA to this country is the Aadhaar card, which the bill got passed, wherein next whatever couple of years, all the government subsidies, all government payments will be linked to the Aadhaar. So for example, if somebody gets 2 scholarships, somebody gets a minority because he is from minority, gets a scholarship, and there is another some bright child scholarship. Today you don't know because there is no system. I mean people will know how much of LPG subsidy has been saved. Now the government is starting a pilot project to start fertilizer subsidy on directly and kerosene subsidy directly. Over a period of time, I can assume that with this kind of all people coming into the banking, plus you add the Aadhaar and then you use the mobility, how the overall government payments can change. But they can do many other things, I'll tell you that. 20 crore accounts have been opened, and now almost every Indian has got a bank account, and Aadhaar you can't fake. I mean, everything else in India could be faked. I mean, you could have your duplicate PAN card or ration card or anything else, but Aadhaar is something which is a most wonderful thing that has happened to us. GST, it's a matter of time. I mean, it's not about whether this will, at some point in time, it's going to happen, but the way tax network is also improving, a lot much of technology is coming in. You shift money anywhere, somebody will come to know in the system, and it's going to be very, very different. The digital finance and payment banks. RBI has given 11 more licenses to these digital banks. Paytm does more number of transactions any day than any bank in India. I repeat that. Paytm does more number of transactions any day than any bank in India. Not in terms of amount, because amount obviously is much larger for banks, but in terms of sheer number of transactions, they are becoming big. And we have only seen Paytm. We haven't really seen what once the Reliance Jio is there, once that kind of broadband is there, and when you have all the other Idea Cellular and Airtel and Tech Mahindra and whatever, I mean, all these banks are very, very different. So the digital finance. So, and you add to that, so when you give money to your driver today or your maid servant today, in her slum or wherever she lives, whatever she buys, that guy doesn't pay any tax. He is वो excise की भी चोरी कर रहा है, octroi की भी कर रहा है, sale tax की भी कर रहा है, because वो उसको cash पे करता है, वो आगे cash में खरीदता है. And then I think the whole system can change, because you will transfer your money to your driver through your Paytm or whatever app, and then he's going to spend his money on that thing. You add this to black money law, I won't talk much about it, but you will see the impact after a few years. You add to this the whole reforms which are happening in the gold market and in the real estate market. The bill that got passed yesterday, some people might say it's very draconian, but I think this is just beginning, because these were the biggest, probably the centers of whatever the black money creation and the black money dealing: gold, real estate, mining. And now mining last year, you would know, thanks to Supreme Court, thanks to the government, thanks to several reasons, no mining license. I mean, a minister has the power to allocate any mine to anybody. Everything is going to be now online, and you have to bid it. Oh, kidhar gaye picture Pandey? Oh yeah. So he was complaining about, हमारे से इतना पैसा ले लिया वो FM के licenses, because earlier you had the power, now everything is like kind of online. All these things, and I can go on few more, will have three very large impacts. So each one of them are designed for certain things without getting too much into it, but some bigger impact that they can have over the next 5 years. A large part of the parallel economy will become the mainstream economy. Keeping things in black is going to be very, very challenging. So I was very hopeful that in this 45%, the government doesn't want to call it tax amnesty or whatever they call it, income disclosure. A lot of money is going to come, but I've done lots of events with some of the CA community. They said, हम तो 20% में कर देते हैं, so 45 देगा नहीं. But I told them, tell your clients, 20, 25, 30 जो भी लग रहा है आज कर लो. Don't keep anything, because you will be in real big trouble few years down the line, because keeping money in cash or keeping money outside the system is going to be a real big challenge. Now when that happens, what happens is, this will just boost the tax to GDP ratio of India, because large number of services, large number of people are, there are very few people. Tax तो मतलब हम जैसे लोगों के लिए है, salaried class के लिए, where we have no option, and then they keep increasing our tax only. But I think it will just boost the tax to GDP ratio. It will also improve the productivity so much. Just think of it. And several of you are from the business community. The smartest guy जो दुकान पे होता है ना, वो गल्ले पे बैठता है. Well, I mean, he counts cash, he deals with banks, he deals with income tax and sale tax and service tax and all that. Just think of it, when these things become online and you don't have to deal with it, how much productivity gets unleashed in the economy. But the another important aspect is that boost to tax to GDP ratio. The one faith I have now on both the central and the state government is that this time we are not going to see the wasteful expenditure that we saw till few years back. If the government tax revenues go up, I'm hopeful that more money will get spent on building roads, on building railways, on building waterways, on building probably more money into irrigation and things like that. Highly unlikely we'll get another loan waiver or some of that kind of stuff. And the third big thing that will happen is that it will also incentivize savings rate, and a large part of those savings coming into the financial markets. I make a very bold call. In 5 years' time, India will be one of those countries which will become to a large extent cashless. When you move out of your house, you won't carry a wallet. Take my word, you won't carry a wallet, because surely you won't need cash, and you won't need a debit card, and you won't need a credit card. So why would you carry? Of course, for your wife's picture and some of the other things that you can keep, but I think you won't really need a wallet, because we are really going to become a digital currency, and I think it's great to have a central bank who's really pushing hard. Otherwise, central banks generally, or policy makers in general, are very, very skeptic of any kind of big innovation, because they think कि कुछ गड़बड़ हो जाएगा. But I think here we have a guy who's saying that I'll give a license to maybe a Reliance Jio to run a payment, whatever, So just think of it also in terms of savings. The guy, and these are very different guys. The guy who can collect 10, 20, 30 rupees of recharge from 20, 30 crore people, just think of his ability to do so many things that he can do in digital, and the kind of competition that he will provide to the banking system. Not that banks will keep sleeping, of course, they will also do a lot of things. And this world is unimaginable today. Had I told you several years back when the ATMs came, that it will be possible that you will have an account in SBI, your ATM card, and you will be able to withdraw money from SDFC Bank ATM, nobody would have believed. Oh, ऐसा कैसे होएगा? SDFC Bank कैसे करेगा? वो कैसे accounting करेगा? But that has become possible. Now I make another prediction. In few years' time, I won't be surprised where you will only have one app, and I'm not talking of website now, online, I'm saying one app of, let's say, an SBI, and you will be able to transact on that app even your account which is there in SDFC or Kotak or any other bank. Even in one app you will be able to transact. The same logic I'm applying. If it can happen in ATM machine, why can't it happen in Paytm also? And just think how the things can change. A few days back my driver came and he said that सर ये लिक्विड फंड क्या होता है? एंड फर्स्ट आई वाज लाइक रियली ज़ैप्ड, मतलब इसको क्या हो गया? मे बी दैट वो इतना आजकल SIP का ऐड लगा रहता है ना, wherever you go you will see some SIP or mutual fund ad these days. So I said, oh पांडे जी, तो he said कि अरे सर सब बात कर रहे थे कि लिक्विड फंड में 8% रिटर्न आता है, मेरा तो जो 1000-2000 पड़ा रह जाता है. So he gets salary from my office which gets credit. I think they have account in Axis or somewhere where he gets 4%. So he said मेरा तो वहाँ 4 ही रहता है. तो मैंने कहा पांडे जी वो KYC वगैरह, मतलब मेरे को भी लगा यार मैं कहाँ भी इनका वो KYC कराऊंगा एंड ऑल. सो जो बोले नहीं नहीं वो सब ड्राइवर्स का बात हो गया है, वो सब हम ऑनलाइन कर लेंगे. Can you beat that? And I can see a revolution coming in next few years where, for several other reasons, I mean I could have just added, I'm just giving you probably a very crude example of how these things can really change, get more savings. And India, which has been like so damn dependent on the global money, global risk appetite, I keep saying that we really dance to the tune of global liquidity, global central banks, global interest rates. कुछ Fed ने interest rate बढ़ाया, हमारा market गिर गया, कुछ ग्रीस में हो गया, हमारा market गिर गया. It's so funny. In 2012, the peak of that Greece crisis, PIGS countries, how many of you remember that? Portugal, Ireland, Italy, Greece and Spain, that whole crisis in the peripheral Europe. And we were so worried at that time. I remember precisely, if I remember, 15th or 17th of June, I think 2012. And every day, I mean, market opens during afternoon when the Europe opens, depending on how the Europe is, and our market goes down or goes up, and people are like so glued on to what's happening in Europe. And incidentally, one of my colleagues, my head of equity, Srinivasan, was in Spain in that week. And he called me, and every day people are so worried about PIGS. Will Greece exit or what's going to happen in Europe? And every day we are watching their CDS and before taking a call on whether to do the SIP or not. And he called and he said, यार नवनीत यहाँ तो मतलब मैं देख रहा हूँ, मतलब we are so worried about Spain. यहाँ पे देख रहा हूँ लोग फुटबॉल खेल रहे हैं, बियर पी रहे हैं. यहाँ तो मेरे को लग ही नहीं रहा है कि ऐसा क्राइसिस है. And we are like so worried about what's happening in Greece and Spain. But I think with these things and with the more domestic savings flow, I think over a period of time our dependence will go down and will provide a lot of stability to the market. Just 2 or 3 things, because there's a lot of criticism about no big bang reforms, no wow movement and all that, but I think there are lots of big bang reforms are happening, and then they will have far-reaching longer term implications than maybe one or two headlines which may excite the market. I mean, a similar thing which is happening in the whole natural resources allocation, the way whether it's the coal mines or yesterday another bill got approved which is the mineral and mining allocation bill. All state governments will follow the same. Every kind of government contract will go online. The Aadhaar bill got passed. This waterways bill got passed. So many bills are getting passed and things are really, and the opposition is also cooperating. And the number of bills that have got passed in the last few days is not a joke. When the real estate bill has been pending for 10 years that got passed yesterday. So many other reforms that I can talk about. I mean, I talked about that Rajan, what he's doing, I think, which is very least discussed in the people when they talk about what's happening. But there are 2 or 3 other things that I'll talk about which have huge long-term implications for what's happening in India. The another thing is India is not about what's happening in Delhi, but I think a bigger growth driver over a period of time, and I've been writing about it for a very long time, is basically what the chief ministers are doing. There's a lot more money which is moving from the central government to the state government. I mean, last year the percentage has like gone up very substantially, and this is, I think, just beginning, and then you will see even more money flowing to the panchayat. One can argue that maybe there is corruption as well, but the more decentralized you do, I think it becomes, the effectiveness increases quite a bit. More importantly, it's not only about the more money in their hands which is going, more importantly is this whole environment of competition among the chief ministers. If you pick up any newspaper these days, the possibility is that the front page ad is going to be vibrant Gujarat, resurgent Rajasthan, some Uttam Uttar Pradesh, invest in Karnataka, invest in Telangana, here and there. In fact, when I was talking about my person of the year, I wrote that when the nation is going through a Piku movement, and I said that all these things, Radhe Ma and Indrani Mukherjee and all that get discussed so much, but nobody talks about how, which I believe, Amravati is the city, right, Telangana? I seriously believe that the man is on a mission. I think Amravati is going to be a Singapore. I mean, may not be close to Singapore, but even if it's close in next 10 or 20 years, it's a big thing, but that hardly get discussed in this whole Pico movement. I think the competition among these guys is driving real reforms. In India, they literally compete with they allow all the chief ministers to compete with each other. कि आप ये दे रहे हो, वो क्या दे रहे हैं. So this ease of doing business ranking, I know that every chief minister is sitting on the head of chief secretary, that why I am number 17 and why, let's say, Jharkhand is there and why Gujarat is there and why Maharashtra is there. So he tells him, sir, अपना apprenticeship act में ये change करना है. There is this boiler law that we have, which is people are really scared of. We need to remove that. These are the changes in labor laws. This is the difference in the land acquisition. This is whatever this license takes these many days. This is not online. हम लोग form लेते हैं, ये change कर देते हैं. And then literally every chief minister is fighting with each other because they know that it's very important that a good economics is good politics. All the analysis that you would have heard on the TV about whatever Bihar election, my reading is that I think Nitish Kumar and whatever chemistry, caste and all that, I think India is making a very, very slow transition, what I call from caste to class politics. It's despite all the whatever Jat, Hardik Patel and everything, I think India is making this slow progress from caste to class politics over a longer period. But I think he won because he delivered roads, he delivered rural electricity. Despite this massive, BJP wave, anti-Congress mood in the country 2 years back, BJP lost in Karnataka because I think the growth wasn't delivered. And I think we underestimate the impact of these things, and I think the local leaders understand it very well that if you don't deliver growth on the ground, you don't come back. If you deliver growth on the ground, you come back. And I think this competition, these 28 chief ministers, I think are the real future. They are the ones who are writing a put option that boss growth 5-6% के नीचे तो नहीं जाएगी. If you have a good central government and some right policies, probably growth can be much higher. The other thing that's happening is, and people keep thinking that looking at, and I'm not talking much negative because you keep hearing so many negatives. I can just go on, what's the problem in the world and what's the problem in India, but I think we shouldn't lose sight of some of the bigger picture. There's real stress in the balance sheet of corporates. There is real stress in the balance sheet of real estate guys. There's a real big stress in banks. But so much of infrastructure, who's going to fund it? I think the government over a period of time will have a higher focus on building capex. The household balance sheets, the people like you and me have a lot more money to invest because our balance sheets are intact. India doesn't have the leverage. I mean, the household balance sheets have a lot of money. They don't have the leverage. It's just that we need to shift that money to the markets. And I think over a period of time, for the reasons that I showed you, more and more money from our balance sheet is going to basically fund. And there's a third balance sheet which is going to fund our large infrastructure, which I think will keep surprising on upside, is the FDI. For all the criticism, I think probably it is the best chief marketing officer that India could get. And just think of it, apart from whatever the government is doing, and a lot more reason that if you are a Honeywell, if you are a Siemens, if you are a ABB, if you are a Starbucks, if you are a Mitsubishi, if you are sitting anywhere in your boardroom and you look at the world map, where would you like to invest? And by the way, I mean, there are lots of problems in Europe and US, but most of the corporate balance sheets are in a great shape. Apple is generating cash every single second, or most of the corporates in US and Europe, they have not been investing and they have been doing pretty well. Money is available at almost 0% and they are doing it. Where are they going to invest? I think we are the last game in town. People had big hope on China, but now that the writing is on the wall, they are going to slow down. India growth can go up. It's a good domestic market, less impacted by what happens in the rest of the world. I think a huge amount of investments can come into India from the foreign direct investment side. And I think these are the three big sources of money. One is the household balance sheets. More and more money shifts from us and get invested. The government, over a period of time, reduce the wasteful expenditure, cut down on subsidies, invest in infrastructure. And third is the foreign direct investment. I keep thinking about even the stress in the real estate side, how it will get solved. So over a period of time, what I think is that maybe, so let's say a builder who has sold at whatever, any place, a 30,000 rupees square feet, and you have 400 flats and you have sold 50 at 30,000. Now you know that there is no buyer at 25 also, but it's very difficult to sell one at 24 because then there is a big difficulty of managing your earlier investor. I think what's going to happen is that huge amount of money is going to come through the REITs and some of these private equity guys, and over a period of time, so let's say he will sell the entire 200 flats at whatever 22,000 to one of these private equity guys, and I expect many more deals. There are already huge amount of deals that are happening in the commercial property space, and that market has already bottomed out. In fact, the overall supply has decreased and the occupancy has been increasing. Over a period of time, we'll have a slow price correction, but an extended time correction, but the PE money will probably, the FDI money will kind of bail it out. So FDI money is going to be a big thing. So I think over a period of time, with all these things, India will create probably something that I talked about the US, and non-inflationary continued expansion, and this time hopefully is going to be more driven by a good productivity, a good economy, rather than the earlier growth that we saw, which was more driven by the government spending. Before I close, I also want to talk about one thing, that how do you make money in this in this environment, how this growth is going to be, who it is going to benefit and who is going to hurt. You just put, I just talked about that Lollapalooza effect, several things happening, but then they have some larger impact which are probably not visible to people. Very similarly, if I just put 3 or 4 things put together, independent of each other, what's happening in the economy and how it can change things, the way of doing business is changing, and that has a lot of impact. One of the most amount of money has been made in India in last 15 years by the people who got licensed to make money. They got licensed to make money, and they made a lot of money. To make it more simple, so you got a license, you got a coal mine, cheaper coal mine, there's power shortage, and you could sell merchant power at 4 rupee, 5 rupee, and there was a license to make money, and you created a free cash of 1,000 crore every quarter without taking name of the company. And you got, I can talk about several other licenses. So let's say even a bank license was like a license to make money, but now RBI said that we are going to put it on tap, and we are going to make you compete against the people like Paytm. So the way of doing business is changing. I can just go on, but I'll try to keep it very brief. My friend Karan is there, who have more interesting thing to talk about. The ease of doing business is generally everybody wants, but remember one thing, when you make it easier to do business, you are inviting more competition, right? A real estate guy, if you know how to deal with BMC, if you know how to deal with XYZ, then if you are making it more and more simple, actually you are inviting more competition. Several of the foreigners who have not been there because they are so worried about the red tape, about the bureaucracy, about the corruption and all, once you remove that and make it easier and easier, you are actually inviting more and more competition. That's one part. The second thing is the way technology is coming as an enabler, and I'll try to keep it very simple, and if you have interest, we can discuss it later. So this is a very good example of, let's say, what the technology can do. So if you wanted to build a national brand, a good consumer brand of a national scale with a, let's say, sales of 500 and 1,000 crores, you have to really pump in tens, if not hundreds of crores on national television. So you have to really, have that Kyunki Saas Bhi Kabhi Bahuti, I don't know which is that's no longer there, right? Oh, there is this Diya Aur Baati, my wife watches that. So you have to be there on that. You have to really pump in huge amount of money on national television. I'll give you a very crude example of what technology can do, but I can give you like 10 others. Now just think of it, with the changes in the technology, analytics, social media, and so many things, if I want to reach out to women between 25 and 35 with a certain cultural and social background, with certain behavioral preferences, living in tier 3, 4, 5 town, I can reach out to them, and I don't have to really spend those tens of crores of rupees. So you are inviting competition from people who are very, very different today. And I can give you several other examples how the technology can really disrupt businesses. Even in financial services, I keep thinking that I think this whole technology can really change things in a dramatic manner. Several of the businesses will find it very, very tough to survive, and several new guys. Look at most of these new entrepreneurs. I keep saying the startup is the new guitar in college. I also want one. And then these guys, look at PTM guy from Aligarh, they look at this TVF guy, India's first guy who got one show in IMDb ranking at number 21. He showed trailers. He has some of the other shows. I mean, no Yash Chopra or anybody could ever do that, and he's done that. And he was rejected by the traditional media, and he just started on YouTube. So you are inviting another competition. My call is, and I'll add one more thing, and then I'll give you a bigger call. The way the supply chain and logistics is changing, we just keep adding all these things, because the whole e-commerce revolution is also improving the logistics in a very, very big manner. For Snapdeal and all, you'll be amazed. I think which city, which is that Mizoram's capital, Shillong or Aizawl, he told me that is the 8th largest pin code for them. Aizawl is the 8th largest pin code for, in terms of sales, for Snapdeal. I mean, it's changing logistics, because several of those guys could never buy something which was kind of are available online. I'll just give you one example of how the logistics can change. A very small example of a friend of mine has funded a very intelligent, a London guy who's going to open a truck operator business, but his truck operation is going to be very different than most of the other people. So he ensures, if I remember the number correctly, I may be wrong, but just to put some numbers, that I think he ensures that the truck reaches from Bombay to Delhi in 24 hours, if I remember the number correctly. And the model is like an airline model, because what happens that वो यहाँ से गाड़ी निकलती है, ट्रक निकलता है, थोड़ी देर बाद वो फिर कहीं ढाबे पे रुक जाएगा, ड्राइवर वो 6-7 घंटे सोएगा, फिर लेगा ट्रक, फिर आगे जाएगा. This guy works on a airline model where he has put ports where there is one driver getting down and the another driver getting in. He has a GPS, he tells you where your whatever stuff is, and it's like very, very different. So let's say if you are running a bakery operation in Bombay, you could never think of selling your product in Delhi, right? आप cargo से तो भेज नहीं सकते हो, air cargo will be very costly, and truck से भेज नहीं सकते हो, and it will be like very costly if you use that cold storage and all. But this guy will ensure that probably you can even think of that. So logistics improvement actually creates more competition, and then you add GST when India becomes one market, then it kind of creates. So one of the big advantage for the existing large guys is that they have a distribution franchise. People say, "Boss, I have a distribution franchise, I'm there." What's now with the logistics and salesforce.com and all these things, everybody has got a distribution franchise. Now you add another thing to this, the fall in the all cost of production. So if you had any business in India which required two things, prime real estate and a lot of people, you became unviable a few years back, because the way cost of people and the prime real estate was going up. Now that has come off, and the cost of people, I think, is also on a inflation adjusted basis is coming down. So you can hire a fresh CA today at more or less same salary than what you were paying in 2008, those heydays, those peak time. So on an adjusted basis, it has come off quite a bit. So I think with the much of supply of the skilled labor and plus the cheaper real estate, the commodity prices are coming down. The cost of capital, at least the availability of capital, because there are so many people funding you so easily at a cheaper cost, which you could not think of till some time back. So all these costs are coming down, the logistics is improving, the technology can help you a lot, and